In today's video, we're going to go over a dividend paying ETF that you might or might not have heard of, but regardless is definitely worth looking into, not only because of its starting dividend yield, but also because this ETF's performance long-term has been pretty impressive. Now, to be completely transparent, I've never looked into this ETF myself. This is my first time that I'm going to be doing this in real time. And just at first glance, this ETF offers a lot of things I'm sure many of you guys are going to like. So if you're ready to dig into this ETF with me, make sure to stick around, drop a like down below, and let's get right into this one. I have some huge news for those ready to get serious about their dividend investing journey. I'm opening just 5 spots for one-on-one investing mentorship from me. I am a self-made 7-figure dividend investor who earns just shy of $7,000 per month in dividends at 31 years old. With this mentorship, you'll receive things like stock ideas, stock alerts when I buy and sell positions, access to my entire portfolio in real time, and I'm even more than happy to review your portfolio. You'll also receive my custom dividend tracker and A to Z dividend investing ebook for absolutely free. Like I said, this is only for 5 investors ready to take action, so don't miss out. So the dividend paying ETF that I'm talking about, the dividend paying ETF that we're going to go through in this video is ticker symbol RDIV, or the Invesco S&P Ultra Dividend Revenue ETF. Now, before we even go through this ETF, see its performance, etc., I want you guys to comment down below if you personally have ever heard of this ETF, if you've ever invested into it. And I'm by no means saying that I know about every single stock or ETF across the entire market, but normally I have a good read on what most investors in the community are buying into. And honestly, I've never heard of RDIV, to be completely honest. But like I said, this ETF seems like it has some potential. The product details says the Invesco S&P Ultra Dividend Revenue ETF fund is based on the S&P 900 Dividend Revenue Weighted Index. The fund will invest at least 90% of its total assets in securities that comprise the index. The index is constructed using a rule-based methodology, which I like, which starts with the S&P 900 index, and 1 excludes the top 5% of securities by dividend yield. 2 excludes the top 5% of securities within each sector by a dividend payout ratio. Number 3 selects the top 60 securities by dividend yield. And number 4 reweights those securities according to the revenue earned by the companies. With a maximum of 5% per company weighting, the fund and index are reconstituted and rebalanced quarterly according to dividend yields and revenue weightings. Now, right off the bat, I like what this ETF has to offer because this ETF has a very strict methodology that it sticks to, just like SCHD, where basically there's not really any emotion involved. It's strictly based off of certain rules, certain numbers, and that's basically all that's going to dictate if stocks are going to get in or get out. Now, it then says portfolio allocation. This is where this ETF gets really interesting. I'm not going to lie, I saw a lot of names at the top of this ETF that I really haven't seen across other dividend ETFs, which of course makes it interesting and potentially a buying opportunity. So the ETF sector allocation is as follows. It's majority financials. Then next, the top percentage is utilities, which is interesting. Then consumer discretionary, we got consumer staples next, and then a smaller portion of this ETF is going to be things like materials, healthcare, information technology, real estate, energy, and investment companies. Now, one thing that you notice, one thing that's for certain we don't see on this entire list is technology, which of course could be good, could be bad, depending on what you're looking to buy into. For me specifically, I like to have at least maybe 15, maybe 25% technology, but even still so far, I'm very interested in seeing and learning more about this one. Now, what's also cool is they actually have the market cap and style allocations listed on here, so 30% plus, and then we have about 46.28% mid cap value, and then a small portion of the ETF is going to be small cap. So now finally looking into some of the top holdings for this ETF, this is where things got very interesting in my opinion. Some of these names, like I said, you don't necessarily see as super large positions in other ETFs across the market. At least for the most part, I'm talking ETFs that I look into normally. So the biggest position as of right now, and of course this can change, is actually Best Buy. Best Buy is currently 5.49% of this ETF. Then Philip Morris is 5.46%, PNC Bank 5.3%. Then we have names like Pfizer, US Bank Corp. We have names like Prudential Financial, IBM, Duke Energy, LYB, and Ford Motor. So just off of first glance, being completely honest and open and transparent, out of these top names, I honestly don't necessarily want exposure to any of these top names. And I know there's some names in this list that I personally do have exposure to because I do personally hold plenty of ETFs across the markets. But as far as these top 10 names go, I'm honestly sort of surprised this ETF has done so well historically. Which, speaking of performance, as of right now, this ETF, ticker symbol RDIV, is actually trading very close to a 52-week range high. So obviously the holdings are doing something right. Not to mention this ETF is up almost 15% as far as price return goes in the 1 year. Year to date, this ETF is up around 10%. So just over the 1 year and year to date, it's honestly impressive. We have to be honest, this ETF has done pretty well so far. One thing that I do see that's sticking out like a sore thumb though right here, the expense ratio for this ETF is 0.39%. that is a very, very steep expense ratio, especially for getting exposure to holdings like we saw a little bit earlier. And for the fact this ETF basically picks its stocks with a methodology that's sort of set in place, this expense ratio is way too pricey if you ask me. Now back to performance, at least since around 2019, this ETF is up around 36%, so pretty decent performance as far as that goes. This is of course not even including dividends. And speaking of dividends, like we talked about earlier in the intro, this ETF does have a trailing 12-month dividend yield of around almost 4%, 3.87 as of right now, which again, for the ETFs across the market that do have some more growth potential, that's a pretty decent starting dividend yield if you ask me. Also important, looking at the trailing 12-month dividend growth rate as well as other dividend growth rates. Trailing 12-month, 13.16%. Over the last 3 years, minus 1.41. 5 years, 6.5, and 10 years, 15.16. So even though this ETF does have some decent dividend growth historically, there's certain timeframes where it's went up a little bit faster than others. But maybe most importantly, to really figure out how RDIV has done, at least historically, if we were to have invested $10,000 with dividends reinvested along the way into RDIV way back in the day, this is around 10.82 years ago. RDIV was trading at around $25 per share. Currently, it's around $47, so it has grown a decent amount in the last 10 years. Over this time frame, again, with dividends reinvested, an investor would have had an average annual total return of around 10.34%, which is not bad whatsoever. There's of course different ETFs and stocks that have had better performances long term, but honestly 10% or anything around that range is not bad. A total return of around 190%. But just for fun, if we were to compare that same exact time frame, and if an investor was to have invested the same exact amount of money into something like SCHD, an investor in that same time frame would have had an average annual total return of around 12% or almost 2% more on average per year, which would equate to around 243% total return over the 10.8 years. So even though RDIV has some decent performance, has actually grown quite a bit as of recently. I mean, it's up almost 15% per year and pays a nice starting dividend yield. At least if we were to compare the Invesco S&P Ultra Dividend Revenue ETF to SCHD, for example, SCHD would have still been the better investment by far. Now, after digging a little bit deeper into this ETF, the only takeaway that I honestly have is that this ETF by no means, in my opinion, is a bad ETF. The top holdings are a little bit questionable, honestly, and the expense ratio is a little bit pricey. But overall, the breakdown, having a large portion of the portfolio into things like financials and utilities, this could be something that certain investors out there want some more exposure to. But now lastly, most importantly, I want to hear from you guys down below when it comes to ticker symbol RDIV or the Invesco S&P Ultra Dividend Revenue ETF. I want to know if you guys are personally invested into this one or what you want us to think about it. Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.